This is Joseph Giacobelli. I'm an analyst, investor, author, and the host of the Asia Climate Finance podcast, which is a philanthropic series dedicated to the promotion of knowledge and discussion on sustainable finance in Asia, from the perspective of the business of decarbonisation and the energy transition in the region, which consumes about half of the world's energy and electricity. Please support this effort by liking and by subscribing to the podcast. Hi, and welcome to the 25th episode of the Asia Climate Finance podcast. My name is Joseph Giacobelli, and I am your host. This is the second episode of 2023, and allow me to wish you again a very happy, healthy, and safe new year. This year, we're looking at topics in a little bit more depth, and we're going to try to have as many case studies as possible. In the first episode of the year, we talked about the smart grid and real estate and the impact of decarbonization and the energy transition. And in this episode, we're talking about the electric vehicle charging business. Our guest is the Chief Executive Officer of Cornerstone Technologies Holdings, Mr. Vincent Yip. Cornerstone Technologies is an electric vehicle charging solutions company based in Hong Kong, specializing in the supply and installation of a wide variety of EV chargers, infrastructure, and central management systems. And I think it is one of the key kind of pieces to the puzzle of decarbonization. Not only is it important, obviously, for us to shift from internal combustion engine vehicles to electric vehicles, but also EV charging points may have other functions as well, such as battery storage, and there's other solutions such as vehicle to grid. So it is a very, very important portion of the decarbonization puzzle. Please continue to support my project by liking and by subscribing to the podcast. Enjoy the show. So I just want to welcome Vincent Yip, the CEO of Cornerstone Technologies. Vincent, I'm very, very, very grateful for your time. I know you're busy. You're in a busy sector and you have a busy schedule. So I really appreciate your time. How are you today, Vincent?
Good. Thank you so much for inviting me. It's my pleasure to have the opportunity to share our industry, with the audience here.
So, Vincent, again, thank you for participating today. Could we just start with you, perhaps, just introducing yourself a little bit about your background?
So I have actually have a varying, very wandering path for my career. I actually started as an engineering student, and I did computer science. So I have my sort of technology platform and know-how back then. But I've never worked in the technology sector until now. I started as a management consultant with McKinsey, and I've been spending I spent almost 12 years with McKinsey in the Greater China office. And then after that, I've actually moved into other sectors, including education, and then in retail, and then in a bit of real estate. So have been in various different management capacity. So it's really wandering across the various different sector, and now it's sort of back to my root where I've actually done my degree. I finally get to have the chance to start on a technology business where I can lead the company, in a very exciting industry, which is the EV infrastructure, EV charging industry.
That's great, and I really again appreciate the fact that we're going to be focusing mostly on your actual business, but I guess as a quick intro to the global market, so to speak. We know that the global electric vehicle market, EV market, is massive, and it's going to grow multiple folds. Depending on whose numbers you're looking at. whether it's IEA or some of the consultants like McKinsey. I think there was a number very recently that predicted that the market would be worth something like 1.1 trillion by 2030 from about 200 billion in 2021. But I mean, there's also some numbers out there, and there's other variables, but it is a very, very big market with lots of potential. Part of the EV, so we're not going to talk about the market too much, but I guess, Vincent, you can allude to it, but I wanted to focus on your actual business. So can we talk about, EV charging first? What is it exactly? Are you just an operator of a petrol station or something, or what's the EV charging all about?
To some extent, yes. We are sort of the equivalent of a petrol station to the old gas powered cars. In the EV world. On the other hand, I think the whole business model in terms of the value chain and how the various different players act out in the EV sector is slightly different from the old petrol station model, right? Let's talk about what we do, and then maybe compare and contrast to some of the big oil players and how they look at it, right?
Right.
For us, we consider ourselves as a one-stop shop EV charger solution provider. So what that means is that we design and develop our own chargers hardware. We will have contract manufacturers to do the manufacturing. Once we get the hardware, we also have to have the software platform, both in terms of the back-end control and the consumer-facing apps and all those things, right? To integrate the whole solutions together. Then this is the point where there are different business model come in place, right? We could sell the whole solutions to another operator, another infrastructure owner, and run with it. That's sort of a one project-based model. Of course, we will do the installation, we will do the testing and commissioning, we'll do the ongoing maintenance, etc., etc. So here, we are the hardware provider, we're the software provider, we are the contract company, we are the construction company, and we're the main. So this is sort of one business model. The other model, is then we don't sell it to others, but we actually go for the B2C routes ourselves directly. So we make the investments and we install all the hardware and the software, and we operate ourselves. And then we charge the consumer or under different models. So we are really taking care of the whole value chain, right, from the hardware side to all the way to the marketing and sales to the consumer front. If you look at the oil company, obviously they would do quite a lot of these from a sales and marketing perspective, finding sites and operating. But they probably don't do their own infrastructure or they don't do their own equipment. That's slightly the difference. The other difference, I would say, it's we don't generate the electricity ourselves. We get the electricity from the traditional power company, and this would be largely just like in the oil world, right? We don't do our own drilling. So we don't control our own whole supply chain. So we have to be dependent on the power company. So this puts us into a situation where there are plus and there are minuses, right? On the plus side, obviously, we don't have to bear the heavy investment into the whole power generation game.
Right.
On the other hand, our supply, our core, sort of your energy supply, it's dependent on the local player, the power generator. So this is how the industry is evolving at this point. There are many changes that are taking place. I think there are mergers and acquisitions. There are power companies getting downstream into this EV charging business. There are EV charging business trying to get all the way up. And there are also oil companies trying to switch from the petrol stations to the EV charging model. So it's very dynamic, but it's fun. It's an interesting arena where everybody is trying to figure out what's the best way going forward.
And Vincent, just to go back, or I should say, go up 30,000 feet. So I think most listeners we know about regulated electric power markets and deregulated electric power markets. Is there a difference? And again, this is not kind of your company specific to your company. That's what I'm trying to say. But more from a general perspective, is there a difference to where an EV charging business operates in a regulated electric power market like Hong Kong versus a deregulated electric power market like Australia or Europe or others?
I think as mentioned, right, a EV charging operator, one of the key cost component, it's obviously the energy, the electricity getting from the grid. And so, whether under a regulated market or under an unregulated market will have significant bearings, in terms of the cost of electricity. In general, obviously, the market competition will help to drive down the cost, and there will be competition and things like that. So that is something that on the plus side, deregulated market, can be beneficial, for us. On the other hand, I think this is not for us to choose in a way, because the power company structure and the whole sort of regulatory regime, is market by market, right? And we tend to look at more of the market forces from a supply and demand on the EV, demand perspective, rather than the power infrastructure. At the end of the day, right, I think the electricity prices is quite transparent to the consumer in a lot of the markets, and for a CPO, for a charge point operator like us, right, it's fairly common that we essentially pass on the electricity costs to the consumer, and making a margin to cover our expenses in terms of investment of the charging infrastructure and also our services that's being provided. So overall, I think it doesn't make a big difference for us in terms of the margin per se. It sort of work it out itself as it goes along. I think more importantly, it's actually the stance for the power company on how they look at EV charging. Whether they see it as your complementary business that they want to get into, a strategic business that they want to get into, or is it this is something that let's just let the market work it out themselves. The CPO will be doing their own thing. They focus on their own power generation. I think that is probably more important. So if you look at China, for example, China, the power companies themselves actually put in a lot of money and investments into providing EV chargers. So it's good for the EV market, the EV drivers. On the other hand, for the EV operator, it's a bit more difficult because they need to compete directly with the government-backed sort of power generation companies. Versus if you look at Hong Kong, the two power companies, yes, they do have some EV chargers that are out there in the market. On the other hand, that's not their main business, and those are not the things that are really under the regulatory regime for them. So they treat it as a side business, and we work with them very closely to sort of build out the infrastructure, and that makes our job in some ways easier to be their partners rather than their competitors.
Right. So having talked a little bit about the different kind of markets and how EV or charging point operators, CPOs, like you call it, operate in these kind of various markets. Could you just touch a little bit, again, at a very high level, very general, 30,000 feet, about different charging technologies, EV charger types? Could you just explain a little bit about what's going on that front? Because I think there's a lot of development and evolution on that front as well, right?
Sure. I think the core technologies right now, for the battery chargers are two types, right? There are the AC chargers and the DC chargers, which are basically the two dominant mode of charging that are out there. Virtually all of the battery powered cars and the battery powered EVs would take both AC and DC. The main difference is on the speed, the power output. So AC charger, typically we would be talking about 7 kilowatts to about 21 kilowatts hour. Whereas for a DC charger, we are typically looking at 30 kilowatt per hour upwards. To some of the fastest chargers that are out there, we are looking at 300. They both of them they have different usage. The way we look at it, it's AC chargers are more suitable for what we call the destination charging, where the car would probably typically spend a longer time the place, like at home or at workplace, even at the shopping mall, where you would spend 2-3 hours watching a film or things like that. And that will charge up a car, a typical EV, like a Tesla Model 3, right? In about 7 or 8 hours. The advantage of the AC chargers is it's simple. The requirements of the infrastructure is a bit lower. It's significantly less expensive. So it has its place. I think the market has a lot of talk and a lot of focus around DC fast charging. Tesla and a lot of people, it's sexy, right? Everybody talks about, it can be, it can charge up the car as fast as 15 minutes, for example. On the other hand, I think, this has, a lot of limitations in some ways as well, right? Because first of all, the power intake, right, by different cars is actually different. I talk about some of the fastest chargers that are out there. Have 350 kilowatt hour power rating. But out on the street, right, very, very few cars, probably 2 or 3 types of cars, can actually take up that power. If you're looking at Teslas, if you're looking at the Mercedes or even the latest, BMW, right? We are talking about 100 to 150 kilowatt hour, in terms of charging speed, right? And that's the average, typical car that are going out there. For an EV to be able to take in sort of higher power, the overall production cost is significantly higher as well. So that's one limitation that we see in terms of DC fast charging, that there's a limit to it. So that's the first thing. I think on a more practical level, it's also depending on the driving, the mode of driving that is happening, right? If you look at the European countries or the US, where your long distance travel, it's more prevalent, right? You need to get on the highway, you're driving for 300, 400 kilometers on one trip, right? Then of course you probably need to stop in the middle, to have a DC fast charging station to sort of top you up, right? But on a typical urban setting, when you are driving, for example, in Hong Kong, right, the typical driver will only drive for 40 kilometers or so per day. Then you don't really have to refuel that fast, right? You might as well just have a home charger at home, and then you trickle in a little bit, 1 or 2 hours, and then you're more than set for the next day, right? So this whole sort of DC versus AC thing, I think it very much depends on the usage. So that's the sort of two core charging method right now. Right. Now then, apart from these things, there is also the battery swapping. That it's some of the car manufacturers, in particularly in China, looking at NIO, it is one of the most sort of aggressive in terms of doing battery swapping in the industry. I think the challenge in battery swapping is that you do have to have the critical mass and enough cars that are out there you're using the same type of batteries. There's no standardization to it, most of the European brands or American brands or even the Korean brands, they are not adopting the technology as such. So I think it's more of a market norm, right? And then it will be it is probably not going to be very common going across all of the markets. It'll probably remain a niche technology, at least for the your 4-wheel drive vehicle. But on the other hand, I think for the 2-wheel drive, the 2-wheelers, the electric bikes and things like that, I think battery swapping it make more sense. Because of the size of the battery, the logistics around that, and that would be more common. So yeah, those are the sort of technologies that are out there right now. If you're looking at the future, there are wireless charging that people are talking about. They are under trial. Fundamentally the power mechanism, everything is the same. It's just that the charging method is no longer charged through a cable, but it's actually using wireless technology. The same as your phone charger nowadays. But it's still again not very common right now. And the main issue is around cost, it's around adoption by the brands, things like that. So I would say that is probably still quite a few years away in terms of being adopted. And then it's completely your alternative way of powering the car, which is using fuel cell rather than the normal lithium batteries that we're typically seeing in a lot of EVs at this point. I think some of the Japanese brands like Toyota, it's a big proponent of fuel cell technology. I think fuel cell technologies has a lot of merits to it. Because it essentially is trying to generate electricity through hydrogen and water, through hydrogen and with water coming out as the byproduct. And that it's really environmental friendly, and also very efficient, because it's just like old gas your cars, right? You basically put in hydrogen into your car like gas, right? And then you'll use that to generate the power. So the refilling speed is actually a lot faster than EVs. And the power generated, the sort of power to weight ratio, it's higher. So it would actually suit the heavy vehicles, trucks, buses, quite well. On the other hand, I think the challenges is around the infrastructure. It's transporting your hydrogen is not easy. It can be dangerous. Also adoption in terms of whether the brands are actually adopting it. Again, it's I think a lot of these technology and technological choices has to do with adoption, right? It's we keep on talking about the VHS versus the Betamax sort of story, right? Betamax has been a good technology in a lot of aspects, but just because a lot of the industry has took on VHS, it becomes the dominant format. And it's similar, where your batteries is has been taken up by all of the major players really at this point, and fuel cell sort of lacking alternative right now. So whether people will actually switch, that is a very big question mark. So I would say, right, in the near future, without your major breakthrough, battery vehicles is probably the way to go. With the EV charging infrastructure that goes with it. that would be the dominant sort of area, coming along, unless there's a major breakthrough somewhere.
And even then, it will take once something else is invented, adoption will take a while. It's not going to be overnight. But one area of the charging kind of charging point operation is the digital side of things. And I'm aware, and actually in the book that I published last year, I talked quite a little bit about the vehicle to grid and other digital solutions. So could you explain a little bit and where I'm coming from? And this a billion times better than I do, because I'm just an amateur when it comes to this. Is the fact that, as you mentioned, alluded to earlier, you're not driving your car 24/7, and I think on average, in urban centers like Tokyo or Hong Kong or Beijing, you're probably driving your car 5-10% of the time, 10% maximum. So 90% to 95% of the time, your car is doing nothing, and that's where the digital solutions come in. So can you talk a little bit about those digital solutions, and is there anything else out there?
The key thing, so let's talk about the key driver behind this sort of vehicle to grid business model, and then using the batteries of the car, right? It's actually because the electricity prices in many markets actually varies by the time that you get the electricity. Now, Hong Kong is actually not that case, right? Hong Kong is actually 24/7. The electricity prices is the same. But in many of the other markets, there is actually peak tariff and trough tariff, depending on the timing. In a lot of the places, the electricity is more expensive, during peak hours, which is during the day, when all the factories are opening, they're running all the business, et cetera, et cetera. So that's peak tariff. Whereas, at night, all the factories close down and things like that, then the electricity, cost is lower. This is all to do with the power generation, the power plants, right? How they operate and how they manage the grid and supply and demand, et cetera, right? So this is the fundamental economic difference here, right? The idea is you charge up the car, right, using the car's battery as a storage at the lower tariff rate. And then using that to power either the car or even your home or other places, where electricity demand is there, right, at the peak hours. So you actually don't need to get the power off the grid under peak tariffs. So that is essentially the benefits in terms of using the vehicle to grid and the sort of integrated charging solution. So there has to be a few sort of components to this, right? The charging system needs to be able to work with the car, with a smart connection, so it can actually determine what's the right time to charge the car. And then it actually has to have the vehicle to grid sort of technology to release the power back to either the grid or through the charger or back to other electricity usages, right? So these sort of solutions, it's not new. It's already out there. There are quite a few solutions that are already out there. I guess the key thing is, right, you're working out the right business case, right? And also from a consumer perspective, they would not do the calculation in some ways. All they want to do is how can I save money, and it's a matter of how does this sort of happen automatically, with the right way, right setup, and making it opaque to the consumer. The consumer just sit there and everything can be done for them through through a digital system, right? And it can be done. It can be done. And I think a lot of operators around the world are sort of looking at these sort of technologies. But as said, I think the fundamental here it's really is the arbitraging of the tariff in terms of electricity, and then
Right.
the opportunity has to be there in order for such a business case to make sense.
And I think in some of the markets, they're also looking at the batteries in the electric vehicles as a storage facility for renewable energy, so that because
Yes.
we all know that when there's no wind power. When there's no sun, there's no solar power. And the other way around is there's a lot of wind being generated, but not a lot of demand, and you need to store it somewhere. So I think in some markets they're also looking at that. Although for Hong Kong, it's still early days, given that we're quite, let's say, behind relative to other neighboring jurisdictions in terms of the development of our renewable energy. But just moving on to the, for lack of a better expression, money side of things, can we talk a little bit about the first in general? And again, we'll get into your company in a minute, but I was thinking of asking you about, what are the kind of revenue models for the EV charging business, and are there, and also, are there some models that are more interesting than others? I'm not talking about necessarily the business model of your company, but just in general, just from a 30,000 feet. And again, I appreciate that different markets, like a deregulated market or a regulated market, obviously will have different revenue models. But could you talk a little bit about the revenue models for EV charging?
I think as I was alluding to earlier, there are typically two sides of the model, right? Whereas there is one side, it's the project-based or solution-based model, right? So a lot of the vendors, hardware, builders, or the software providers, right? They come up with a solution on EV, right? Be it hardware, be it software, or be it integrated, or be it on the construction side, right? And they sell it to others, right? And make a project revenue out of that, right? That is a big market in and of itself, and many of the countries, particularly when we're talking about the build-out phase, of the infrastructure, this side of the equation is, definitely, a major sort of growth area, for a lot of the companies. So this is sort of one typical business model. Then on the other side, is the recurring B2C sort of business, the typical CPO, charge point operator business, where the company, the CPOs will be making the investments themselves, right? Be on the infrastructure themselves, and also the software, and also the sales and marketing that is needed to run the operations, and then they charge the consumer, right? So this is the recurring model. This is the model that a lot of the new startups are actually adopting right now, across the globe, looking at EV charging infrastructure, provision of these sort of service. Now, there are many variations to how to play around with this sort of B2C business, right? For us, for example, we have two ways of charging our customers at this point, right? There is the opportunistic, sort of fast charging, where all the in our terminology we call it Cornerstone Go. Where we are at a platform where we install chargers at various public locations, right? These are the shopping malls, these are the public car parks, right? These are the event venues, hotels, etc. So when the car comes in, they take certain amount of electricity, and we charge by the amount of electricity that they consume. Right, so this is sort of one typical model. Many of the charging operators are actually using across the world. Another model that we have, right, is what we call the Cornerstone Home. This is a private charger network where the chargers that we have installed is actually in private residential buildings or commercial buildings, private spaces. So these can be your car park spaces that has been bought up in the condominium by the resident, right? This can be a sort of a monthly rental car park space in a commercial building, for example, right? So these are private spaces where one specific car it's going into, right? And so there is a dedicated charger for that EV alone, right? This provides a lot of convenience, and also the most importantly, the guarantee of the availability of the charger, right, to the EV owner. And to a lot of EV owners, this is actually quite important, right? For that, right? They don't want to have that, what we call the range anxiety, and saying, now my battery is going down to 20%. Will I be able to, get it charging, right? And having that certainty of the charger in their own home, in their own workplace, gives them a lot of comfort. So the way then we charge it is we invest in the infrastructure, and then we sort of rent it and take it on a monthly subscription basis,
right?
For the EV owner, right? So this is no different to your broadband service, where the broadband service give you the broadband signal and give you the modem and give you all those things, right? We are the same, right? We give you the charger, we give you electricity, we give you insurance, we give you the sort of after sale service, and everything in that one package on a monthly subscription basis. So that is another interesting model that we are adopting, and we are pushing that quite aggressively. Now, obviously, there is synergy across the two models that I talk about, the Cornerstone Home and Cornerstone Go, because the way we actually conduct it is that the Cornerstone Home user can actually use their credit that is purchased through the home subscription plan on the Go network, right? So it actually makes it doubly attractive for them to have a home charger, but they can if they can't use up their unit, and if they have the need, for example, to top up outside, they can also top up outside, right? Then this makes it a good proposition for EV owners. And these are some of the business model that we as a company are adopting on, and I can see quite a lot of the other companies are actually doing a similar thing.
Right.
Now, then one sort of variation sort of to this, and many of the companies are looking at is actually going the asset light route, and because theoretically, we don't need to own all the hardware and EV infrastructure ourselves. It can be owned by another asset partner. They own the charger. They will take the charging income, as well as the parking income and all those things, right? And for us, we leverage the platform, the app that we have already put up, to serve them, just like an Uber or a Deliveroo, charging. So it's actually a win-win for everybody, right? Because the consumer will be able to see, where are the charges, whether they are available or not. This in turn actually drive business to the EV charger owners who may not get the business, if they do not put up their charges, onto a platform, because they won't be able to reach the consumer that easily. And then for us, we just take a platform fee in between. So this is a variation to sort of the typical CPO investments that we have been talking about. And I think again, this is something that we are taking on and trying to develop, and we see this as a way to help the various different players in the ecosystem to really grow together.
Before we get into some of the more nitty-gritties on your company, Vincent, I wanted to know a little bit more about the whole kind of financing side of things. How does the sector attract capital? And here I'm referring to the small to medium sized companies, not the giants like I don't know, a CLP in Hong Kong or a State Grid Corporation in China or a BMW. Is financing an issue? What are the challenges there?
I think now there are a lot of good things that are sort of positive to this sector, right? I think the whole industry, the investments communities focus on ESG is actually making EV charging as a big positive, right? Because we are a very sort of clear cut ESG company, right? Where we are directly contributing to the reduction of emission, right? And so this is definitely a big plus from a ESG investment perspective. On the other hand, ultimately, right, if we are looking at EV charging, it's an infrastructure play, right? It's a asset heavy sort of business, right? As you mentioned earlier, right? This is the equivalent of petrol station, in the old days, right? So when we are talking about the investments, when we are talking about the return horizon, right? It's not like you're getting huge business and then you get money back, in 12 months, right? It's not like that, right? Typically, if we are talking about installing a station or you're building the infrastructure for a whole residential estate, for example, right? We are talking about your period of return of 4 to 5 years, right? So this has to play to the investors sort of investment horizon, right? Typically long-term investors would they are okay, right? 4 or 5 years looking at a stable return afterwards, that's the good thing. On the other hand, what playing against that, it's for these type of players, they usually don't invest into small startups. Right. So that is sort of your catch-22, right? We need players to look for long term, to accept that sort of return. On the other hand, they probably want to look for something that is bigger. Whereas for those smaller investments, PEs or VCs, who are typically looking at smaller investments, right? They would want to have more immediate return and shorter sort of investment horizon. So as said, this is a bit of a catch-22 in terms of finding the investors with the right vision and with the right profile to sort of getting into a business where, yes, short term there will be a bit of growth, but ultimately we are talking about building a long-term infrastructure player with a steady return on a medium to long-term basis. And so that I guess is sort of the challenge for us, and this is that's why I think from our perspective we are having that sort of a complete business model where we have the short-term project revenue coming in, so we don't have to have a long investment horizon and rely on the recurring model. Right, before that sort of ramps up, we have these sort of short-term, project-based revenue and profit that is coming in, and that will actually help to at least solve some of the sort of long-term, short-term cash flow dilemma that we sort of talk about. I think we're getting a lot of interest. I think we're getting a lot of interest from investors. But I think the current overall environment, as you and everybody would know, it's challenging. I think a lot of people in China, in Asia, or across the globe, are fairly conservative right now, because of the overall outlook of the market. But I think as said, right, if somebody is looking for an ESG type of investment, with a very sort of certain growth potential, EV charging is definitely one of the top areas to look at.
Right, and I mean, I think it's not just the kind of EV charging business, but it happens with renewable energy projects as well. I mean, if Joseph Jacobelli tries to get financing for a 1 megawatt solar plant, even though it's got a very good impact investment outcome, maybe helping the local community or whatever it is, financing 1 megawatt is going to be very difficult. If, on the other hand, I'm trying to finance 1 gigawatt, and the difference being between $1 million US and $1 billion US, it's a lot easier. So it's kind of like the challenge that you see throughout and it's something which is kind of slowing down decarbonisation as far as I'm concerned. I'm interested into exploring a couple of more areas. One is when it comes to the EV charging business. Investors, analysts will think about the risk elements, because obviously the higher the risk, the higher the return that you require. So could you very briefly address some of the kind of top line concerns that some people have about the EV charging business in general? And I've got six altogether, so I'll go through them quickly. First of all, what do you think about government support? Is that a real risk?
I think government support again, right? It sort of goes to the overall fundamental demand, right? EV charging only works if there are EVs that are out there.
Right.
It really depends on the number of EV pickup, right? I think the government, a lot of the governments, across the globe, and even in the Asia region, it's pushing hard on EVs, right? But the amount of incentive that they are putting out for people to buy EV will still directly affect in terms of the amount of EV being sold, right? Recently, the US, for example, has sort of lowered the incentive a bit. And people have already have some sort of doubt in terms of whether EV will pick up as quickly as it was.
Right.
So I think that is sort of the big thing, really around the potential risk. But I think to be quite honest, there's another factor which is sort of mitigating that, right? It's like in China, right? A lot of the incentives on buying EV are slowly being factored out. On the other hand, because all the car brands, all the big brands are actually pushing for EVs. There are more and more choices of EVs, and there are less and less choices of ICEs. Internal combustion engine cars, right? And because of the cost of EVs are actually coming down, and the gas prices are coming up, people are making savings, by actually switching to EVs, and so therefore, that's sort of partly alleviate the risk of the government taking away incentives in buying EVs.
Another one is there a problem of competing charging infrastructures, or that's not really an issue? Because as you mentioned earlier, you've got AC, you've got DC, and there's no real competing infrastructure when it comes to EV charging. It's just pretty straightforward.
I think from a technology perspective, I don't see sort of a big leapfrogging of any sort. The competition is more on the various different operators. Whether there is a sort of overbuilding of infrastructure, having too many chargers that are out there. In many of the markets across Asia, that is definitely not the case. In fact, a lot of the Asian markets, they are still lacking a lot of EV chargers. So the market utilization is still fairly high.
Right, and I mean, I've got a whole bunch of other ones, but I think the last one I think is quite crucial, is about cybersecurity. So you as an EV operator, or any EV operator, has to be able to communicate with the plug so that you know how much electricity you're selling, and I suppose you have to be connected to the electric power company as well. What is there a cyber security issue there or risk for on that side of the business?
I think now currently all the or most of the chargers that we are operating ourselves are actually connected to our own backend. And we don't obviously store the consumer information per se, right? We do need to work with payment operators, to have payment information going back and forth. So I think we still have to go through some of the standard cybersecurity auditing to ensure we are transferring these sort of information in a safe and sound way. So that's the first thing. Secondly, I think what we have done is actually all our backend is running on a cloud server. I think this is one of the great sort of technology myth where many people are saying why are you actually putting things on cloud? Is there a higher risk in terms of cybersecurity risk or having things on cloud? Why don't you have your own sort of private server and things like that, right? The way we look at it is the amount of money that we can spend on protecting our server is probably 1 trillionth of what Amazon can actually put in in protecting their service, right? Google, Amazon, all these cloud players, they are spending so much on cybersecurity to ensuring their data is actually being protected. So I would actually argue, having things on the cloud server is actually safer. But obviously we need to be diligent around it. We have to, as said, we do our own cybersecurity audits, around our software, our apps, to ensure we are handling information, in a sensitive way.
Right. No, and I do think it's going to be an interesting discussion when people do more with the EV charging infrastructure. I mean, like once you get into vehicle to grid, where you've got a two-way communication, et cetera, it's gonna be quite an interesting conversation there. Now, if we can get into your company, Cornerstone Technologies, if we can start a little bit with about the history and because I think it's quite interesting for listeners of the Asia Climate Finance podcast to understand Cornerstone Technologies as a case study of a startup business which is actually quite key to the energy transition, quite key to decarbonization, and this is how I view at least the EV charging business. So could you start a little bit very briefly with the company history and background and how it all got started?
So the company was actually formed in 2016. So the company has been around for 7 years or so. And it was founded with a small technology team looking at developing an AC charger. Specifically, for urban markets, that was sort of the initial aim, right? EV was at that time is still relatively up and coming industry. Very few EVs are out there in Hong Kong yet, but everybody knows sort of that's the way to go. So I think the founding team was actually very visionary in terms of picking an area and going with it. To be quite honest, I think in the first few years, it takes a bit of time to really take off. Because back in the days, 2016, again, the market was actually quite small, and there were very few sort of people, looking at the market at that point. Then come around 2019 or 2020 or so, the industry demand starts to rise. So I think our current our shareholders right now, there are 3 investors, private investors. In Hong Kong, they have the vision to see this is really an area of growth going forward. and they have you sort of acquired the company, or a lot of the majority control from the founding team. And then injected the company into a Jamboard listed vehicle. So now we are actually Cornerstone Technology is actually listed on the Jamboard in Hong Kong right now on Hong Kong Stock Exchange. So that was 2020. Then the market sort of really start to take off with a lot of interest in 2021. I actually only joined the company at 2021, at the end of 2021. And that was when the market, when the shareholders feeling this is now really a good time to have a big push in terms of the industry growth, right? It catches the sort of the growth rate of the EV industry. At that time, Tesla has just launched it, the Model 3 and Model Y. It has sort of taken the market by storm, right? It has become the best-selling car in Hong Kong, period, right? It's not just the best-selling EV, but really it's the best-selling car, right? It has an EV in 2022 actually takes up about half the whole overall Hong Kong new car market. So in 2021, 22, the shareholders brought me in, and we're looking at really to grow the company in a rapid manner in many of the markets. So in Hong Kong, we've started that way and really pushing it, and then trying to get to a market leading position. And by the end of 2022, we have already started to go beyond Hong Kong and expand ourselves into Southeast Asia. So we have formed the 2 JVs, one in Cambodia, one in Thailand already. We have opened our first station in Cambodia in November last year. We are going to open our first operation in Thailand this year. In the next few months or so, and we are also starting our business in Indonesia and Malaysia as well. So Southeast Asia again, it's a major growth market for us. And that sort of bring us to where we are. To become we are definitely one of the larger players in Hong Kong in terms of EV charging solution. And at the same time, we have the aspiration to become one of the biggest in Asia.
Right. So the kind of growth model, because obviously in Hong Kong, the limit is going to be, number one, how many electric vehicles actually come onto the roads and when, and the replacement rate. And two, the at least in Hong Kong, I guess another limitation is they still get a lot of bureaucratic government permitting permits, as far as I recall. It's but plus the fact that just to share a really boring story, when I tried to get an EV back in 2018 or 2019. Sorry, no, that was even earlier than that. That was like 2016. And talk to the power company. The power company say, yeah, sure, no problem. And it was the owners of the building. So in Hong Kong, we've got these committees, which I'm sure you have in other countries as well. But the owners form a committee. And because at the time me and another person were the only ones that wanted to get EVs, they said, well, we're not going to pay for your infrastructure or whatever it is. And the whole discussion, it was a lack of knowledge. And I think 5-6 years onwards, the situation has improved a little bit, but not a huge amount. So I think there's going to be a little bit more growth still in Hong Kong because of these kind of the government processes being hopefully a little bit more efficient going forward in terms of approvals. And also the market knowledge, market understanding that if you get a power line to charge your EV in your car in the car park of the building, other people are not going to be paying for your electricity, but you're going to pay for it. But I think the growth in in other markets is very interesting, particularly because you're going from a developed market, i.e. Hong Kong, which is not saturated, which has still got growth, as I mentioned, but still it is a developed market, to really, developing markets like Thailand and Malaysia, to almost, emerging markets like Cambodia. So could you talk a little bit about your kind of growth strategies a little bit more, and is it just going to be a volume game?
I think for us, right, our experience in Hong Kong actually helped us to refine our product, both in terms of hardware and software, and the model of service to the EV community. I think what we have learned is actually the primarily urban market, right, that we are talking about here. In Hong Kong, it's quite unique, in sort of this Asian point of view, kind of way, right? If you are looking at the US, if you are looking at Europe, when people are living in houses, they have their own garage and all those things, right? Then the whole sort of charging model, and charging infrastructure, is very different from the condominium based, sort of big housing estate base, sort of setup where is very common in Hong Kong and across all these Asian cities. And so therefore, we have developed unique ways that we feel can be deployed across the urban regions across Asia. And that's the model that we are taking on, right? So using the experience that we have learned to develop the platform in terms of hardware and software, then work with some local partners, right? Because we fully understand that every market in Asia has its own unique ways of conducting business,
Yes,
networks and things like that. So we can't go in alone, right? So we go in with a local partner, and then you're working with the local partner to identify sites, to invest into building out the infrastructure, or finding deals, where we can actually sell a solution, it's a complete one-stop shop, right? And you're using these to grow our business. As said, I think we do believe we have a unique advantage in terms of we are an operators ourselves, so we have actually gained a lot of insight and knowledge in terms of what does it take, right, to build up a good sort of EV infrastructure, and that help us to actually either serve clients in other markets, or work with our partners to sort of develop the right solution for those markets. From an economic standpoint, right? As you mentioned, I think Hong Kong it's a developed market, but there's still plenty room of growth for a number of EV that are out there. But ultimately, right? Hong Kong is just one city, and the number of cars that are in here is limited to the population, right? Whereas if you look at Thailand, look at Malaysia, look at Indonesia, the overall number of vehicles on the street are significantly higher. So the potential is definitely there, and so from a volume, from a numbers game, we do want to tackle those markets. Cambodia, or other emerging markets, they have their own advantages as well, right? I would say, right, the journey that is being taken up by these sort of markets are actually very different from a Hong Kong perspective, right? If you look at Cambodia right now, right, it's similar to probably China 15, 20 years ago, right? They are starting to develop their various sectors, including manufacturing, including their services, with their tourism and things like that, right? And really a sort of middle class is rising out of it, right? And what do the middle class buy when they get the money, right? The first thing that they will get is to buy a car, right? the other hand, when they are buying a car, the first car that they will buy nowadays is actually an EV, right? It's not that they are going to buy a gas car and then switch to an EV in 5, 10 years time, right?
Right.
And so there is a bit of a sort of jumping through the technology, right? And we are no longer serving we are serving an emerging sort of a middle class segment that they're buying their own car. That is what we're looking at. So we have a lot of positive optimism over these sort of emerging markets simply because EV is going to be the dominant infrastructure going forward.
Right. Just before we conclude, this has been a fantastic conversation, but I think it's about time I ask you one tough question, just one single one. If you're going from Hong Kong and you already signed up, Cambodia and Thailand, and you're looking at other markets, is there a risk that you're overexpending too fast, knowing that, as you mentioned earlier, at the end of the day, we're talking about long duration assets. It's a long-term investments. Your returns are not over, like a tech company, over 6 months or a year, but it's over 4, 5, 6 years. Is there an overexpansion kind of risk, or going too quickly, too far, or you feel comfortable with that?
I think if we're looking at the way that we're expanding, as I mentioned, right, we never think about going alone, in some of these market expansion. And it's part of what I mentioned, right? Then there needs to be a bit of local know-how, right? Across all these Asian markets, and at the same time, right? There is also a realistic question around investments, right? That's why we are finding JV partners who are willing to sort of work with us and invest with us together. They are looking, having share the vision with us in terms of investing into the sector.
Right.
So that is sort of helping us in terms of in a more controlled manner. I think that's one thing, right? And then we are also looking at investments in Hong Kong even. And we need to be creative around how we actually work in our investments, right? As I mentioned, right? We even in Hong Kong, we are working with asset partners where we some of the asset obviously we invest ourselves. Some of the asset we would have investment partners to buy into asset, and we provide them with a regular return. And there are people with that sort of investment horizon, right? And that will help us grow our network without burdening us too much in terms of the financial resources. We still need funding, obviously,
right?
But at the same time, I think we are using different ways and creative structure to ensure we are growing and in the right pace. I think at the end of the day, the overall EV market, in EV, infrastructure market, the potential everybody can see, right? In this sort of market environment, it's difficult to find a sector where the growth is so certain, right? To some extent, right? Now the only way is up, right? For EVs, because another industry is coming down, which is the traditional gas and petrol. And if you look at the gas and petroleum industry, right? Across the world or even in this region, right? It's such a huge business, right? And just replacing your 20% of it, it's already a big enough pie. For a lot of players, right? So for us, it's not about capturing everything, but it's working with people who share the same vision to sort of capture the market together.
And it's really interesting how when you go out to these other countries, and I'm not putting words into your mouth, but it's my own interpretation. To be clear, is that you're not just bringing in the capital, because at the end of the day, people who have capital can invest capital, but you also bring in experiences from Hong Kong. There's a know-how. There's a technological knowledge as well, apart from the operational one. So that's quite interesting. And just one point about the EV markets. I mean, I'm probably one of the most bullish people out there. I think it's a sector that people love to criticize. I mean, in Europe, what people complain about is not enough charging points, and that's great, because it means once you have more charging points, guess what? More people are going to get EVs. But it makes so much more sense. Less maintenance, less noise pollution. I mean, the whole decarbonisation thing, etc. So to me, the growth is immense. Vincent, this has been a really, really great conversation. Can we do a little bit of a wrap up? Some final thoughts, some insights from you, some outlook about some technology and about the EV charging market in general.
I think, as mentioned, the EV market, is really trending up, from many perspectives, right? The environmental impact, the environmental sort of emission, decrease and reduction sort of potential, is really tremendous, right? And this is fundamentally doing good, to the society and to the world. So this is one of the key things that we are interested in the sector. So that's a good thing, right? But if we just looking at the business, if we are looking at the fundamentals, right? As said, right, it is not easy, nowadays to find a industry where the growth is so certain, right? And with the ESG benefits as well, right? A lot of the investor should be, I would say, looking into this sector. And I think, with this sector, it's still in the early days. Many people have been buying into the EV companies, right? Tesla stock prices has skyrocketed. Nowadays, if you look at BYD or the other EV players, they are getting a lot of investment attentions. On the other hand, EV infrastructure, it's a bit sort of under the radar still. But if you actually ask all the drivers, right, what is the most important factor when they are considering buying an EV, right? We have actually done a survey ourselves, right? Over 60% of the prospective EV buyers, right? Their number one concern is actually whether they would have the EV charging facilities available to them. And as you said, right, a lot of people are actually complaining, about the lack of EV charging infrastructure in many markets across. So this is actually good news for us. It means that there is actually plenty of demand that is going around that is unfulfilled. And so therefore, we do see, a significant way up, for the industry. Then it's about, finding the right model. I think, it's building the right connection with the consumers, building the right, sort of communication, education to the potential partners, right? Like the real estate developers, like the building committees, like the car owners, right? To sort of build that ecosystem. And we are really, at the center and the forefront of it, and this is very exciting. That's why I'm so interested, and so excited, about the work that we are doing. So that's great. I hope there will be more people who will be interested in the sector, and spending more attention around this, and more resources will be going into this. And let's hope that with more EV chargers, more EVs that will be out there, on the market, making the world a greener, cleaner place.
Yeah, and I think the whole EV range anxiety is sometimes a little bit. I don't want to be nasty about it, but a little bit funny, because I mean, some of these cars today, you can actually drive for 500 kilometers before you need a charge. And given places like Hong Kong, I think, if I'm correct, the average speed altogether is about 25 kilometers, and the average range is about 25 kilometers per hour is the average speed, and the average range is about 25 kilometers per day. So everybody, like I don't know about you, but I want to have my telephone charged 100% all of the time, right?
Yes.
Which is
Yes.
actually bad for the phone. But you've got these. So it's the education element. I think is quite important. Well, Vincent, I would like to really, really thank you. You've been very, very generous with your insights and with your time. And so thank you very, very much for participating in the Asia Climate Finance podcast.
Thank you so much. Thank you so much for having me.
I hope you did enjoy this episode of the Asia Climate Finance podcast. I would really appreciate any feedback, topic ideas, etc. My contact is in the show notes. Thank you.